Hey, too, what's happening? Chris here. Want to bring you all something I was studying and just want to bring you an update, something that was kind of on my mind here. And it's the number two, in my opinion, the second most difficult thing to deal with in cryptocurrency is stop loss placement. Number one, if you guys have watched my previous Litecoin and Bitcoin videos, you know that my number one is the volatility in this market, as well as that it's open 24 hours a day. I mean, everybody has to sleep, guys, so it's impossible to be able to catch every move or, sell out at the perfect time, or try not to leave money on the table, when you take your profits, or when to, let your stop loss go, or use a mental stop loss or an actual stop loss. I mean, there's just so many things that you can get into. But for me, the second most difficult thing in cryptocurrency is stop loss placement, and I'm going to get into that with you and the reason behind that. So guys, with stop losses here, just to give you an example, this was in one day, and this is the market that we're in, and we have to realize we're in this market because there's so many people. I myself will beat myself up and I'll go, oh man, it was 3 in the morning, there's a huge move there, I should have been after it. But you can't, guys. I mean, that just is what it is, and that's why I'll also trade some stocks too, because it's nice to actually have that close, the open and the close, and to be able to say, okay, I'm done with it for right now, and I can go study or spend time with my family or do whatever. Crypto doesn't sleep, and it can make people insane. It just is what it is. I mean, it's made me insane before. I'm sure it's made you insane before. But take a look at this, guys. In one day, our price was at $297, and we wicked all the way down to $145. So think about that. If you were just really trying to be safe and you're trying to, move your stop loss up as this move was taking place, and say you even had one down around 204 or whatever, it just shoot right down through that, guys. And it would have taken that money, and then boom, it was back up, and we ended up closing at 268. So if you had a stop loss down here, you're getting stopped out. And that's tough. That even if you try to give it plenty of room, something like this could happen. So that's why placing stop losses are so difficult in cryptocurrency. And truly the suggestion that, or a better way to put it, the thing that I do, and you have to train yourself to do this. Yes, there's times if you're going to bed overnight or you're in profit and you use those trailing or stop losses, that's great. But guys, sometimes you have to use the mental stops in cryptocurrency, and you have to be diligent about it. I use a trading journal, and I write down, and I'll say, okay, I have my mental stop at say 175 or whatever, and if it hits 175 or that wicks at 175, then I'm out of the trade. I want to be done with it, because most likely if it does start going down to that levels, it'll continue even farther down to that levels. And some of the biggest mistakes people make are holding on to losers as opposed to just cutting them. And there's benefits to day trading and there's disadvantages to day trading, but one of the benefits to day trading is the simple fact that at the end of the day, you lock out your position, you're in cash, and it doesn't matter what happens in terms of news overnight or anything crazy going on. You've locked in your profits or whatever, and that's it. So that is a freeing thing that the market does actually stop. So that's something, and this is, guys, this is number two most difficult thing in cryptocurrency for me. Like I said, number one is the 24-hour market and the extreme volatility, the thin order books in these markets. And then what I want to show you here, let me get this here. So look at this next one here. We're going to do our price range tool just to show you. So this here was 45% to the downside. That can happen on a wick in a day in cryptocurrency. So this one here was 29% down. These ones right here, where we almost had those tweezer bottoms there, you can see that. But I mean, these ones here, guys, even 15, 16, 17%. And whenever you see those really long wicks to the upside there and you see that rejection, a lot of times you'll see the downward movements. Just like to the downside here, do you see where we had basically what would be almost horn bottoms? They were almost a week apart there. And we had those wicks. We wicked down to 103 and we saw defense on long wicks, and then we moved to the upside. So wicks can be very valuable, but truly for me, let's say I'm playing the stop or the stock market or whatever, stop losses work great. Put them where you want to be because there's not as much volatility. But in cryptocurrency, I really feel like one of the best things you can do is have a mental stop and really stick to it if you're in front of your computer, and you can do that. Otherwise, then put a stop loss in, but you really need to use stop losses because these type of things can happen, and they can happen very, very fast in the cryptocurrency space. And the number one thing you got to do is protect your capital so that you can stay in the game. If you're a long-term investor or hodler or whatever, guys, do you. I'm just talking to people here who are learning about trading, because I'm learning about trading. Like I said, I'm going into my second year here studying this stuff, learning about this stuff. I'm still a vast beginner in all this, and I just want to learn as much as I can. I want to take as many people as I can along with me. So guys, I'm going to put this as my number 2 is stop loss placement. I feel like that is one of the most difficult things in cryptocurrency, is finding that perfect spot to put in that stop loss, just due to the volatility and everything we see here with all the wicks. So want to bring this to you, give you a quick little tutorial there, guys. Like, subscribe, hit that notification bell. Appreciate you being here with me. God bless.